Hello and welcome to another update video about gold. Gold is actually holding quite well, given that the stock market sold off. Crypto is currently under pressure. I mean, not really surprising, given that gold is sort of moving on its own, right? And it's adhering very well to the already presented structure. So let's talk about the microstructure on the way up. Spoiler alert, there is no change to the last update, so everything is still on track, which is good. Okay, so we don't necessarily want changes, but there are two wave counts I just wanted to explain again. First of all, we have a bullish thesis on gold and have, well, for a while now, actually. Especially since the low in November, October 22. I mean, I didn't really cover it before that in public, but I think I did cover it when we started to come down here. Then we had this low in wave 4. And then since then, we've been rallying, not in an impulsive way, but I consider the move up a diagonal pattern on the gold chart. So we have this ABC structure in wave 1. We have the wave 2 pullback. Seems like we have an ABC structure in wave 3. And you might ask, okay, why do we have an ABC in a third wave can't be an ABC. Well, it can if it's part of a larger fifth wave, which is an ending diagonal. It's like the last wave up of a larger cycle. That's at least my interpretation. Not finished yet. Should still, even the third wave could still go a little higher. And the fifth obviously as well, because there's another 4-5 pattern that is due. And looking at this structure here, the idea is that this is a third that's currently unfolding the C wave of the third wave in the white count. The white count, the white scenario, sometimes people ask me, what's the white count? Well, it's the count in white. It's showing that we already have a wave 1 to the upside completed of that C wave. A C wave is a 5-wave pattern. The wave 2 already completed was less deep than ideal and not so reliable, but I have to go with that. Then a third wave to the upside, possibly completed exactly where it needed to in this region around the 1.236 to the 1.38 extension. The wave 4 might now be unfolding. I explained to you in the last video that this is the support area for impulsive support, okay? Impulsive support. So ideally we're holding this area. Normally an ideal target for a fourth wave is the 38.2 retracement. Haven't touched that yet. Do we need to touch it? No, it's important that we stay above that level though, okay? Stay above that support level. And doesn't mean we have to get there. It would be ideal, yeah, and in most cases these are reached. 2,295 would be next support, and then any break below that level will already shift probabilities towards the alternative scenario, which is also bullish. Actually, it is more bullish, but short-term a bit bearish. But I have to say that a break below 2,295, while it will, at least in my interpretation, invalidate the idea that the C wave is an impulse, because the wave 1 of C looks like a 3-wave move, it could still turn into a diagonal pattern. So I would leave the door open for a potentially still unfolding wave 4, even if it comes down a little bit lower. But below 2,260, I would say this is probably the B wave. Yeah, so in a diagonal pattern, which a C wave can be, an ending diagonal, the fourth wave can go a little bit deeper. And I normally allow for a dip to the golden ratio level. Anything below that is not clearly a wave 4 anymore for me. And even in a diagonal, I actually prefer it would hold the 50% fib level. But it might be worth having that as an additional buffer zone down here. Yeah, and then from here we could see a fifth wave to the upside emerge to 2,458 or 2,515 to complete wave C of 3. And then we should still get another 4-5 pattern. Now, what happens if we break and sustain below 2,259, 2,260? Well, it would probably mean that we are in a B wave pullback. So how does that fit into the bigger picture? The B wave would be the idea that, well, see, in my interpretation, I've got an ABC structure here. Well, my idea is that this ABC structure is a third wave. But it could also be that this third wave is more aggressively bullish than I would initially assume. So I've got it here as an assumption, but not as main thesis until the chart tells me I have to follow that, because it would lead to a very extended third wave. It means that this here, all of this, as an ABC structure, only forms the larger A wave of the third. Then we get a B wave pullback, and then we can get the third up here. Okay, so this is more aggressively bullish, but it would mean that the third is going very much extended, which could happen if, circumstances remain favorable for gold, I'd say. But yeah, this is only going to be something I'm going to follow primarily if there is a break below 2,259. But then even below 1,944, I cannot follow that anymore. Then it might be time to adopt a more bearish stance for gold. So with any analysis, you need a level for risk management that will tell me that these theses that I have aren't going to play out. The initial one, the white count below 2,260, a sustained break, that wouldn't be a disaster because we still have a lower support area. But then I'd say below 2040, also here probabilities shrink already, but B waves can be deep. So 1944 is really the key level. And then we should see over the coming weeks and months still, again, rising prices for gold. That's my update about gold. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you're interested in daily updates about the S&P 500, as well as regular updates about stocks, then feel free to check out our stocks and S&P 500 service for additional content and updates, and you'll find the link in the description. Thanks a lot for watching. Bye-bye.